Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for September 3rd, 2009. One reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you have established a proven track record on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Okay, traders, as we've seen prices consolidate across the board today following a pretty heavy dollar day, aside from a few pairs like the Swissy and the yen. Latest economic data points to a possible decline in the pace of job losses. Yesterday's ADP employment numbers fell by 298,000 in the month of August, which was worse than expected, but still the smallest decline since September 2008. So the data should be highly scrutinized as well because it doesn't correlate well with the non-farm payroll numbers. We saw factory orders released for the fourth straight month, which was increased for the fourth straight month, but a breakdown of the numbers show us that the increase mainly came from a surge in aircraft orders. So that data should to some extent be scrutinized, and even though the factory orders increased, we should see how they play out over the next few months, because if you take out transportation, the factory orders actually decreased by 0.4%. We're going to continue to anticipate further price volatility during economic data releases, perhaps a little bit of price consolidation ahead of the non-farm payroll numbers, and we do expect the non-farm payroll numbers to push us overboard, whether it's going to be for further dollar strength or perhaps against the dollar. That we won't know until the numbers come out. Okay, moving on, we're going to take a look at support and resistance levels for the euro dollar. Looking at the daily, currently trading at 142.63. Our first level of support for the euro is going to be found at 142.54. Make this 142.50 even. I like the round figures. 142.50 sounds even better. Below 142.50, we're going to see 142 and 141.60. Below 141.60, we see 140.80 and 140.45. If the dollar loses more ground against the euro, we're going to see 143 as the first level of resistance for the euro. 143.50 follows, and 144 and 144.50 are not far behind. Once again, we're still looking at some of these wedges that we were looking at. If I zoom out, 1 second here. If I zoom out, we can still see that there's really no clear trend. Up, down, and I like this long red bar for dollar strength. If we break below the 142 level, I anticipate going to the 140s and then testing the 140 level. But until we break that 142 level, we may see some price consolidation between 141.60 and 142.50. Taking a look at pound dollar, currently trading at 162.65. Dollar gave up a lot of its gains yesterday, all the way back up to 162.90, currently trading at 162.65. First level of support for the pound is going to be found at 162.47. 162 is below that, followed by 161.59 and 161.08. Below 161.08, we have 160.33. If the dollar loses ground, we're going to see 163.34 as the first level of resistance against the pound. 163.78 follows. These are the recent highs, followed by 164.25. Above 164.25, we have 165.41. Again, we anticipate a bit more of price consolidation ahead of the non-farm payrolls release. Looking at dollar yen on the daily. This is one of the pairs that continues to go down. The dollar, rather, continues to go down against the yen. As we've mentioned before, we're looking further equity slides, so we anticipate that the dollar may continue to weaken until we find some sort of a stable area. We're not going to predict anything here. We continue setting lower lows. At this point, we may see further price consolidation. 91 level is going to be hard to break. 90 level is going to be even tougher. We don't have much below the 90 level. So let's cover the areas of support for the dollar. First up is 91.83, followed by 90.89, 89.82, and 88.57. And if you recall from past videos, we talked about 91.83 being recent lows, and 90 is, we're now below the 90 level. There really, below the 91 level, there really isn't anything here concrete. We really have to play these three candles, these two candles, and then this candle, and this candle as support and resistance lines. As you can see, that 90 level played, I would rather say it was a 91 level. I mean, we were going to see a little bit of distortion above the 91 level or below the 91 level, but nonetheless that 90 level is pretty significant. We had support for the dollar here, we had resistance, we had support here, support here, support here, and we also had a little bit of resistance going above the 91 level. So that's how we got those numbers. Now if we take a look at resistance for the dollar, we're going to find, I believe that 92.40 level isn't significant anymore. We talked about that yesterday. First level of resistance is going to be found at 92.85, followed by 93.27, followed by 93.80, 94.50, 94.80, and 95.21. Now we have 6 levels of resistance here. What I'd like to mention is this 94.80 level and 95.21 level. We're going to combine these two and call it 95 even. I would point to distortion as the reasons why we see these wicks going higher, but as you can see, a lot of dollar sellers at the 95 level couldn't break through that, so we continued down. Okay, now looking at dollar Swissy at 106.09. First level of resistance for the dollar is going to be found at 106.27, followed by 107. This 106.27 level isn't really significant. We had resistance here, we had resistance here quite a few times, as well as support. Given the fact that we broke above that and below that, it's not really significant. However, it should be respected to some extent. Above 106.27, we have 107, 107.40, 108, and 108.30. In case the dollar continues to lose ground, we're going to see 105.84 as the first level of support for the dollar, followed by 105.50, 105.27, 104.77, and 104.11. And if you recall, we talked about these levels being somewhat significant, but going back to last year, these were the wicks coming down. Never closed below the 105.50 level, but these wicks should to some extent be respected. However, a break below the 105.50 level could lead to significant losses for the dollar, especially if there's a close. So we're going to continue monitoring the market. Really excited about the non-farm payroll data released this Friday. We're really looking forward to it, and hopefully getting a new trend set in place after Friday. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for September 3rd, 2009. Until tomorrow, everybody, good luck trading.